Good morning, Sanket, Onkar, Pradnya. Can you hear me?
Yes, sir.
Good morning, sir.
Where are you joining us from, Pradnya, Onkar, and Sanket? Hello, can you hear me? Where are you joining us from?
Sorry, sir.
Where are you joining
Hello?
us from? Where are you from?
I'm from Pandharpur, sir.
Okay.
I'm from Y.
Okay.
I'm from Solapur, sir.
Okay. Welcome here to the CBOB class. This is your first domain class, right? So we'll start with introduction to financial system. Okay, so my name is Abhishek Somani, and this will be the fourth CBOB batch that I'm teaching here. Okay, good to see all of you. Firstly, a quick thing. Are you working somewhere? Are you full-time students right now? Can I just know before we start? All of you?
Yes.
All of you are full-time students right now. Okay, fantastic. Okay, and do you have any sort of work experience in this area, in this field? Nobody. And what about educational background?
I have completed my M.Com.
Okay, you've completed engineering. Okay, you also have engineering. Fantastic. Okay, so you are planning for a switch in career. You don't want to continue with engineering field. Okay. Pradnya, Onkar, Sanket, what about you?
Sir, BCom.
Okay.
MBA Finance.
Sorry, Pradnya, you said
MBA in Finance.
MBA in finance. Okay. Sanket?
BCom completed, sir. And
Okay.
I have 2.5 years of experience in TCS right now. I'm working in TCS.
Okay. So, okay, fantastic. Yeah, Sibam. Yep. Okay, so what we're going to talk about today is the financial system. Okay. Now, what do you mean by financial system? If we say financial markets, what are the different areas of financial market? Who are the people who participate in these areas? Okay. So if you say a financial market in general, what all comes into the financial market? I think we can close this from behind. It will be a lot of noise here and there. Instead, we can switch on the fan if you want. Financial markets. So what all are a part of financial markets?
Stock market.
Stock market is a part of financial market. What else?
Primary market.
Within stock market, you can have primary market. Primary market means what?
So, sir, the market which is issued IPO, new offering.
Okay. So what we'll do is let me just open up an Excel sheet here and we will keep making a list on that Excel sheet as we go about. Yeah. Just a second, please give me a while. Screen sharing is disabled here, so I'm just checking on that, everybody online.
Okay, sir.
I will probably have to log out and log back in. Just doing that in a moment. Okay, so I'll open up the Excel sheet now and we will make a list here. Financial markets. All the constituents who are a part of this market. Who are they? So one you said is stock markets. Stock markets is what? It's a place where stocks are bought and sold. Okay. And then you pointed out primary markets. Okay. Now, what is a primary market? Stock market can be divided into two further markets. One is a primary market and the other is a secondary market. Now, what do we mean by primary market? Primary market is a market where a new issue comes in. What do we mean by new issue? For example, LIC is about to come up with an IPO. Have you heard about this? Yes?
Yes, sir.
Yes.
No? Okay. Just a quick raise of hands if you have heard of or not. Everyone has heard? Okay.
Yes,
So,
sir.
some of you have not heard. No, not a problem. See, one thing that I would require you to do from today onwards till the end of your course. Okay. Honestly, not till the end of your course. As long as you are going to be a part of this industry, okay, is to be aware of what is happening in the industry. Okay. If you're going to work in an industry, obviously you need to know what is happening in the industry on a regular basis. Okay. So being updated about financial news is something of a requirement. Okay, you need to know what's happening. So and with these days, it's not really hard. You can just Google for financial news today and you will get all the updates of what is happening on this field as of now, right? So please do this. You can watch a YouTube channel which gives you news. You can read Economic Times. You can just Google top financial news for the day. Do anything, whatever you like. But being updated on top financial news is a requirement, is also an expectation, because I would often keep taking examples, or any other trainer who might replace me during the course might also keep taking examples from what is happening right now. Okay, so please keep doing this all the time. Okay, so primary market, stock market could be divided into primary market, primary market is what? Primary market, whenever a share is listed, new shares are listed. Whenever a company says that, okay, we want to get listed in the market, till now you cannot buy LIC shares. Okay, you can buy LIC policies, but you cannot buy LIC stocks. Okay, it is 100% owned by Government of India. Okay, but now a portion of LIC will be offloaded by Government of India and will be made available for people to buy and sell at stock market. So they will come up with an IPO in the primary market. Okay. So once it comes up in the primary market, people will buy the stocks. Some people will buy the stocks. Okay. How do you buy stocks in the primary market? They will advertise IPO is coming. You will apply and you may or may not get the stocks depending on whether there has been an oversubscription or not. Right? For example, if somebody wants to sell 1,000 stocks and applications have been made, okay, you have advertised that we are going to apply, we are going to come up with a new issue, okay, and applications have been made for 10,000 stocks. 9 out of every 10 applicants will not get it, right? Okay. So it is not necessary that you get it. Okay. So this is the market where you would apply for stocks, or for that matter, any other financial instrument. Okay. But now that you've got the stocks, the question is, what will you do with them? What happens if you one fine day want to sell that off? Okay. Because primary market does not give you that option. So you have a secondary market. Without an active secondary market, chances are that people will just be stuck with their investments. Even if LIC is doing fantastic, okay, it will be very hard for me to sell LIC stock. Why? Because there is no active market where buying and selling takes place. Okay, so look at it this way. In the primary market, a company comes up asking people for money. People give money, that money goes to whom? That money goes straight to the company or the existing owners of the company. Okay, and now people in general, they have bought all this stock. In the secondary market, when people buy and sell, they just buy and sell with each other. Okay, that is the difference. Okay, let's take a quick example to understand this. Let us say ABC Limited comes up with an IPO of 1,000 crores. Okay, ABC Limited comes up with an IPO of 1,000 crores. Is this visible clearly to you? Okay.
Yes.
Okay. They are issuing shares at a price of rupees 1,000. So which means how many shares are they issuing? How many shares? How 10,000? 1 lakh into 1000, will that be 1000 crore? That'll be 1000 lakhs, no? 1 crore shares. People, come on. We can easily multiply with zeros. 1000 into 1 crore is going to be 1000 crore. Okay, can we expect you to do 10 multiplications properly, people? Otherwise, we'll have a lot of difficulty in the class. Okay, once again, 1000 crores, 1000 rupees का एक share है तो total कितने shares होंगे? 1 crore, right? 1 crore, right? Simple enough. Okay, so total number of shares issued are how much? One crore. Okay. So company has come up with this IPO. People, let us say, apply for this, and actually the total number of applications are for double the amount. The total number of applications are for double the amount. Okay, so in the primary market, applications are received for 2 crore shares. Now, what does this mean? We will call this situation as oversubscription. What do we call the situation as? Oversubscription. Why? Because the company only intended to sell how many shares? 1000 shares. But people have applied for how many shares? Double the shares. Now, in this situation, will everybody be able to get the shares? Will every applicant be able to get the shares? No. So, out of only half of those applicants will get the shares, the other half applicants will not get the share. Okay. So, this, what do we call this kind of thing? Oversubscription. What if a company wants to sell 1 crore shares, but only 600 or 50 lakh shares get applied? What will we call that? Under subscription. Okay. So this company has got subscribed. Now this, they have sold 1 crore shares. Okay. People applied for 2 crore, but they can only sell 1 crore, right? Because that was their original idea. Okay. So 50% of the people, they will say, thank you so much, take your money back, we cannot give you shares. And the other 50%, they will give them shares. Okay. Now, this money, this has gone to whom? Who has taken this money? This, how much money are we talking of? 1000 crores, because 1 crore shares, and every share cost 1000 rupees. So totally they have collected 1000 crores. Whom did this one? Who has this 1000 crores? ABC Limited. ABC Limited has it. I would request everybody to be on mute. Please unmute only when you want to speak. Some sort of background noise coming. Thank you. So ABC Limited, okay. Now, what we will say is market capital, share capital of ABC Limited is how much? Share capital, how much share capital have they raised? We will say that they have issued 1 crore shares, and for each share they received 1000 rupees. Okay, so they have got capital of 1000 crores by selling of shares. Okay, they've got a capital of 1000 crores by selling of shares. So we will call this as share capital. Okay, people, any term that you are not understanding, just let me know. We can take all the time, but we need to make sure that every term is clear. Okay. So share capital is 1000. Sorry. Yeah, take it. Yeah, no problem. So share capital is 1000. Now, imagine if ABC Limited tells you all we want to do is collect money and do business. Okay, we don't plan to get listed on a stock exchange. Then they will not really get any people to buy on primary market, because an existence of secondary market is very important if you want to sell your stocks. Okay, think about it. You have applied for ABC Limited. Why have you applied? Because you think ABC Limited is a fantastic company. It has great growth prospects going forward. The company will become 3, 4, 5 times in size. Thereby, your stock should also become 4 or 5 times in size in the price. Okay, but then the question comes: without an active secondary market, selling of that stock will be a huge pain. Can you sell it? Yes, you can sell it. But will it be easy to do? No, it will not be easy. Okay. So we can think of two terms here: traded at exchange or exchange traded, or OTC. Okay. What do you mean by exchange traded? Okay. Something that you can buy and sell on a active stock market on the exchange. Okay. And then there is something called as OTC. The full form of OTC happens to be over the counter. Okay. So what does over the counter basically means? OTC market basically means selling one-to-one or selling without the involvement of a market. Okay. So if a stock is sold on the primary market but not listed on the secondary market, that means you will have to sell it over the counter to somebody. OTC. Okay. Generally the word used is OTC. When somebody tells you OTC market, I have done a deal in the OTC market, that means it was not a deal done through stockbroker and the exchange. It was a deal done one-to-one with somebody. Okay. Now, as a layperson or as a person who has their full-time job and other things to look after, okay, getting deals done in OTC market is not clearly the thing that you are looking at. So every company who comes up with an issue would also get it listed on the stock exchange. Most of them list on two major stock exchanges of India. Rather, there are only two right now. All online students, please feel free to unmute whenever you want to speak. Okay. Whenever you want to speak, please feel free to unmute and speak out. But when you don't have anything to speak, please keep on mute. That will help everybody else.
Sir, OTC, for OTC, there is any platform to trade in OTC?
There is no market as such. Can there be intermediaries? Yes. Okay. In fact, investment banks are one of the intermediaries who help their clients trade with each other. And we are going to, as we progress through our course, we'll see what kind of work investment banks do and how do they help out their clients trade with each other.
Okay.
Okay.
Yes.
So we have exchange traded markets and we have over the counter markets. Okay. So most companies who will come to the stock market will get listed on the two exchanges in India. Which are these two exchanges? BSE and NSE. Okay. So BSE and NSE are two major secondary markets, or rather at the moment, the only two active secondary markets, exchange traded markets for stocks. Okay. Quick question. Which of them is a bigger market? NSE. It is NSE, which is the bigger market. Which of them is older? BSE. BSE happens to be oldest not only in India, but all over Asia. BSE was the first stock exchange formed in Asia. Okay. There are only two right now, but once upon a time there were many. Okay, there were more than 20 stock exchanges, but with computerization, people in all cities could trade at the major exchange, so there was no need felt for so many exchanges. Many others had to close down because they couldn't keep up. Otherwise, there was a time when there used to be a Delhi Stock Exchange, Chennai Stock Exchange, Kolkata Stock Exchange, and so on. Okay, but no more. So now you have a BSE and an NSE. Okay, so these are active stock markets where people can buy and sell today. For both these markets, we have an index which tells us whether the market is going up or going down. What is the index of BSE called as? So we have something called as Sensex, okay, which is the index of BSE, and the index of NSE is called as Nifty. Okay. So very often you will, if you open a business news channel, you will hear words like Sensex has gone up by 1,000 points, Sensex has gone down by 2,000 points, huge fall in the Sensex, it's gone down by 3,000 points, or Sensex has made a new all-time high at 60,000, so on and so forth. And same for Nifty. Okay. Yes. Index means a representative number. Okay, a representative number of what is happening in the market overall. Okay, here is how. Okay, we'll just digress for a couple of minutes and understand what do you mean by an index. Okay, have you heard something about inflation? Inflation goes up by 5%. Inflation goes up by 4%. Our inflation is getting very huge. It's going up by double digits, going to double digits. How is inflation measured? How do they decide what is going up? There are certain things which are clearly getting cheaper. For example, a phone that you can buy for 20,000 last year is probably available for 17,000, 18,000. So not everything has got costly. Okay. So how did we decide that inflation is 5%, 6%, 7%, or whatever percent? Okay. We took a representative of the most used things. Okay. And did their price rise and rise by how much? Did their price fall and fall by how much? Okay. So index tries to capture the gist. Okay. If inflation is 7%, that does not by any ways mean that everything has gone up by 7%. There are things which might have become cheaper also, and there are things which might have gone up by 20% also. Okay, but more or less on an average, if I was spending 100 rupees last year, I will have to spend 107 rupees. Okay, overall. So similarly, Sensex, BSE Sensex has a history of starting in 1979. Okay, 1979, and it started from a amount of 100 rupees. Okay, started from an amount of 100 rupees. Okay, so what did they do? They said that who can actually represent the market? Let us pick up 30 stocks. What did they do? Okay, 30 stocks. So for example, let us say if we were to create a vegetable index, okay, what vegetables could you put? What are the most consumed vegetables?
Onion, potato.
Onion, potato. Let's make them few more. What else? Chili. Is that chili a vegetable? I'm not sure. Chili, I think, should be a fruit, but anyways. Tomato is technically also a fruit, but technically छोड़ देते हैं. Tomato. Chili, तो मतलब you will put only little bit of chili. No, don't make sabzi of chili. So consumption of chili will not be huge. Okay. Cauliflower, cabbage. Okay. maybe ladyfinger. We will certainly not have things like broccoli. Okay, we will certainly not have things which are consumed occasionally or by very few people, or even those who eat will not eat broccoli as much as probably what they eat of these vegetables. Okay, so we will have these representative vegetables. Okay, now does this 6 mean, okay, chances are that the prices of this 6 have reduced, but broccoli has increased. But what we are saying is, on an average, in the vegetable market, people are having to spend less money or more money. Okay, so that is the index. So BSE Sensex also is represented by 30 stocks. Okay, so BSE Sensex has a list of 30 stocks, and those top 30 stocks in 1979, if their price was totally 100 rupees, if 100 rupees was a representative number, from 1979 through today, what is the index today, BSE Sensex today? About?
Around 60,000.
Okay. Let's go out and check exactly where it is. So today it is 55,609. At this moment, a minute down the line, it will change to something else. As long as market is open, right till 3:30, you will see this is changing all the time. Okay. Similarly, it is already changed, and you can also see this information. It is down by 616 points today. Okay, so this is going down today, which basically means what? The stocks in the Sensex are going down. Okay, once again, do we mean to say that every stock in the Sensex is down? No. Okay, on an average, we see here 1.06% down. Okay, so some stock might be down 4% also, some stock might be down 0.5% also, and maybe some stock is up also. But on an average, they are down by 1.06%. Okay, that is what this means. Okay. Similarly, Nifty is the index of which market? NS. Okay, and Nifty you see is 16,645. Okay, it is also down by 148 points today. Okay, so Nifty began in 1995 from a base of 1,000. From a base of 1,000. Today we saw in 2022, this is somewhere around 55,000, and this is somewhere around 16,500. Sorry, 16,600. Okay, this will keep on changing. So what do we understand? 100 rupees, if it would have been, yes, yeah, okay, so 100 rupees invested in Sensex companies, had you remained, let it be invested, would have become 55,000 in 2022. But are those companies same? No, those companies, many of them might have already closed. And many of the companies which are now a part of Sensex weren't even there in 1979. They weren't even born. So the rule is pretty simple. The biggest 30 companies on BSE will form a Sensex, will be included, just like we included 6 most eaten vegetables for vegetable index. the most traded, the biggest 30 companies on BSE will make Sensex, and for Nifty, the number is 50. Okay, pretty simple to easy and remember. Okay, the top 50 companies on NSE will together form Nifty, right? So if some other company becomes bigger, it will replace one of the older companies. Okay. So we'll come back to ABC. What was happening at ABC? ABC has come up with an IPO. When a company comes up with a share for the first time, we call it IPO. The full form of IPO is initial public offer. You are coming for the first time, you are offering to people, public at large, to say that whoever wants to buy, please go ahead and buy. So that is called as an initial public offer. So ABC Limited comes up with an IPO of 1000 crores. They have issued shares at a price of 1000, totally 1 crore shares. Okay. So we decided that the share capital of the company is 1000 crores. Now, once the stock gets listed in the market, it will sometimes go up and it will sometimes go down. Right? There is no stock which just keeps trading sideways all the time. Okay, there will be periods when it will remain more or less similar, but over the time the stock will go up and the stock will go down. Okay, what are the reasons because of which stock will go up? The company's sales increase, the company's profit increase, or sometimes just because everybody has feeling good and they are investing in the stock market, so the demand increases and stock price increases. Right? Okay. So ABC Limited gave stocks at 1000 rupees. Okay. Now it has started trading in the exchange. It got listed in NSE and BSE and it is now trading in the exchange. So let us say the prices of the stock have gone up. Okay. So let us say stock price now. Now the stock price is 1500. How much it is? 1500. The company totally has 1 crore shares. Price of one share is 1500. Okay, so is it a 1000 crore company now still? No, it's not a 1000 crore company anymore. What is the worth of this company then? The worth of this company is 1500 crores. The worth of this company is 1500 crores. Okay. So are we going to say the share capital of the company is 1500 crores? No, we can't say that. Why we can't say that? We can't say that because ABC Limited never got those 1500 crores. If you look at their balance sheet, if you look at their accounts, okay, if somebody is going to ask them, "Arey, your value is 15,000 crores, show me where you have 15,000 crores." People at ABC Limited will tell you that no, we don't have 15,000 crores, we only have 1,000 crores. Okay, so then who has this extra 500 crores? Public shareholders. See, how did this happen? People who had originally bought for 1000 rupees, okay, now when they sell the share to somebody else, okay, I bought for 1000 rupees and now I am selling to you for 1500 rupees. So this 500 rupees is going into my pocket. No, I paid 1000 rupees for the shares and now I'm receiving 1500 from you. And you are buying at 1500, hoping to sell it at 2000 to somebody else after a while. Right? So that is what we are primarily looking at. Okay. So what does this mean? Basically, what we are saying is any extra this thing is not going into the pockets of the company. Okay, that will make the investors rich. Okay, so this 1500 will make sure that the worth of the company today is 1500 crore. And there is a term that we'll call it market cap or market capitalization. It is often called as market cap, but the word is market capitalization. The word is market capitalization. So what we will say is market cap of the company is 1500 crores. Mostly you will be hear people talking of cap, not capitalization, but you should know its full form happens to be market capitalization. Okay. So if someone asks you what is the difference between share capital and market capitalization, what will you explain?
Share capital is the value of the company and market capitalization is the amount of market the company has captured, the profits of the company and the investors.
Actually, the reverse. It's the market capitalization which is value of the company. Today, the company is worth 1500 crores. So, if somebody has to buy every single share out there, somebody has decided that मुझे तो ये company पूरी की पूरी खरीदनी है. Okay, I am going out there and going to buy every single share. Okay, so how much money they will have to spend? They will have to spend 1500 crores. Right? उनको 1500 करोड़ रुपए खर्च करने पड़ेंगे इसके लिए. ठीक है? So we will say that market capitalization of this company is 1500 crore. मतलब the company is worth 1500 crore. Now this is from theoretical point of view, because if somebody decides कि I will have to go and buy every single share, okay, the price will actually shoot up further. Why will the price shoot up further? Because yes, some basic economics, it's a basic matter of demand and supply. Okay, anything which is demanded more people want to buy, but supply is still the same, no? Okay, the number of quantity of shares are same, but people buying have increased. Okay, so the price will go up. So technically, if somebody decides to buy all the shares, the price will actually shoot up. They will not be able to buy at 1500 crores. Okay, just because somebody is buying more, price will start shooting up because demand is increased. Okay. So what have we looked at till now? We have looked at, in the financial markets, we have stock markets. In the stock markets, we have primary markets and secondary markets. Okay. In the secondary markets, we have two major stock exchanges, BSE and NSE. Okay. BSE is the oldest stock exchange in Asia. It started from a base index of 100, currently at 55,000 approx. NSE started in 1995 with a base index at 1000, currently at 16,600 approx. BSE Sensex is made up of 30 stocks. NSE Nifty is made up of 50 stocks. Okay. Every time a company gets listed in the primary market, that is where a company is trying to raise money. Okay. But the money that is raised is called as share capital. Okay, but it also needs to list in the stock market, secondary market, because if you don't list in stock markets, then chances are you will not attract very many customers in the primary market itself. Okay, if you go on to say we just want to collect money, and whenever you want to sell your shares, you can simply sell it OTC. What do they mean by saying you can sell it OTC? You can sell it over the counter. This basically means you can sell it to anybody who you like. Now, where do I go and find that anybody who I like to sell my shares to? Okay. So to make it convenient and easy, they will definitely list on a stock exchange as well. Okay. Now, the price which they raised from the market is called as share capital. Okay. The total money that they have raised from the market is called as share capital. Okay. On the other hand, their price may increase or decrease. Okay. Over time. And the current price into total number of shares, that is called as market capitalization. So if somebody asks you what is the value of the company today, share capital will not give you the value of the company today. Market capitalization will give you of the value of the company today. Okay. But having said that, if you decided to buy an entire company at this price, will you be able to buy? Technically, no. Because just because you start buying all the shares, the fact that you are trying to do so will increase the demand of the share in the market. Okay. Thereby checking up the prices. Okay, so these are some small things. Okay, that you have to keep in mind. Okay, everything is clear till now. Now, we can consider all of these market as a part of a broader market, which is called as capital markets. So even above the stock market, we can say there is a capital market. Within the capital market, there is a stock market. So within the capital market, we have one is stock market. But before we look at further, let's understand the word capital market. What do we understand by the word capital market? Where capital is raised, and what do we mean by capital? Okay, let me give you a scenario and tell me what happens here. Let's think of we are starting a business. Can somebody give me a bright business idea which we can start? What business can you start today?
Any business started with some amount of money, maybe that is known as capital amount.
Yeah, that is known as capital amount. So I just want to take an example. Give me some kind of business that we can start.
Vegetable vendor.
Sorry?
Vegetable vendor.
Okay, fantastic. Will be a vegetable vendor. Okay, so a vegetable vendor. Okay, somebody decided that I want to become a vegetable vendor. Okay, so this vegetable vendor will need a place to sell vegetables. Okay, will need some furniture. Okay, to display the vegetables. Okay, will need a signboard up on the shop. Okay, and then some money to buy the vegetables also. Okay, so capital is that money. What is capital? Capital is that money that you will require to start your business or expand your business. Okay, now let us say this vegetable vendor. Okay, I'll just go to the next sheet here. So let us say this vegetable vendor in order to get a place, set up furniture, put a signboard, all of that needs 5 lakh rupees. How much? Five lakhs. Okay. Now, where can he get this 5 lakhs from? One, he can get it from his own funds, or he can go to a bank and take a loan. Okay. So, what are the sources that he has?
Friends, relatives.
He can take it from bank. Now, that will be a loan, that will be debt. Okay. Or he can ask somebody else to invest. Okay. That will be what? That will be no. So see, okay, let's put it this way. He can borrow the money from people or bank. So he can take a 5 lakh loan from bank or friends and family. Okay, or investors, whoever. If there's a professional investor also, he can go to a professional investor. For example, maybe there might be a microfinance institution who might be wanting to give them a loan. Microfinance institution is a institution which typically gives loans for a very small business. Okay, but either ways, we will call it debt. Right? So what have they raised capital? They have raised the capital by the means of debt. Okay. So anytime you want to start a new business, you can raise money as debt. You can raise capital as debt. Okay. It doesn't matter what the size of your business is. Even our ABC Limited could have raised 1,000 crores by debt. Right? They could have gone to the bank and borrowed 1,000 crores. Okay. Or they could have borrowed from investors 1,000 crores. Instead of selling them shares, they might have sold them debentures, which is a form of borrowing. Okay. Now, our vegetable vendor can also raise equity. Can also raise equity. Okay. So, where will he raise equity from? First and foremost, from his own funds. And second, from any other interested investor. Okay. So this person might make a presentation to his friends, family, that this is a great spot to sell vegetables. There are a lot of people who live in this area and they have to go 1 kilometer away to buy vegetables, because in this huge society with maybe 500 flats, okay, is at least 1 kilometer away from nearest vegetable vendor. And if we were to open a vegetable vending business right outside this colony, the business is almost guaranteed. Okay, so people hear out his pitch and say that, okay, we will invest money. Okay, so he can also sell his equity, which basically means that this person will no longer be a full owner of the vegetable vending business. He will run the business, but he has sold a part of his business to somebody else. Now that somebody else will share the profits and losses. Okay, that somebody else will share the profits and losses. Now, will this vegetable vendor be able to sell his shares to people at large? Can he come up with an IPO yet? Can't come up with an IPO yet. One day when he has vegetable vending shops across the country, he becomes a large vegetable chain. Okay, probably that day he can come. Okay, because as of now, it would be not possible for him to launch a public issue. Okay, for his shares. So probably he can raise money as equity from friends and family. Okay. So this is capital. Okay. So now let's think about, let us say you are raising money as debt. You raised rupees 5 lakh, but then you will also have to buy vegetables, right? You will need some money for that also. Okay. So you will need money of, let us say, 50,000 to buy different vegetables, and then you will need to buy the vegetables and sell those vegetables. Okay. Now, here is a question. You go to the bank and you say, I need 5 lakh rupees of capital. And the bank asks you, how soon will you repay? Can you repay by next month? No. You go to the bank, you ask for a loan of 50,000 to buy vegetables. And the bank asks you, can you repay next month? Can you say yes? Why not? What is this money for? This money is for buying vegetables, right? आप वो vegetables ताकि खरीदोगे, you buy vegetables for 50,000, you probably sell it for 70,000. Okay, how long will you take it? Probably 4 or 5 days to sell. उसके बाद तो anyways बच गया तो फेंकना ही पड़ेगा ना, सड़ जाएगा वो. Right? So chances are, this is what you can repay in a very short while. Okay. Capital will be required once. This money will be required again and again. Okay. So this money is required to run the business. This money is required to run the business, keep the business running. Okay. Okay. So in order to raise this money, we call it money market. This is, what do we call it? Money market. Okay. Money market is a market where you get money for a very short duration of time. Imagine we go back to ABC Limited. We go back to ABC Limited. ABC Limited is making huge profits, but one day they are falling short of money to pay salaries on time, right? Because they have completed some huge orders. Okay, so you might ask, if they are so profitable, how come they don't have cash? Well, a profitable company at times may not have cash. Thibaut? A profitable company may at times have to face cash flow problems as well. Why will they need why will a profitable company face cash flow problems? First and foremost, maybe ABC Limited has completed a large order, but uska payment aayega 20 days ke baad, right? So they can say, we have done our work, now all we have to do is sit and wait for the payment to come. So we are a profitable company, but do I have cash in my bank account today? No, I don't have cash in my bank account. Okay. Or they have bought some large piece of equipment worth rupees 50 crores. Okay. Now this equipment will keep on generating profits for them for next 15 years. But expense to aaj hi ho gaya na pura. All of cash outflow is gone now, right? So profit and cash, having cash, are not the same thing. Okay. A profitable company at times may face cash crunch because the money is yet to be collected, or a lot of money has been spent, which will keep giving rewards for a long time to come. Okay. So because of these things, profit and cash are not the same thing. On the contrary, it may sometimes also happen that a company with a lot of cash is actually not making good profits. Both situations are possible. Okay. Yeah, it is also possible that there's a company making a lot of profits, has a lot of cash, and making no profits and has no cash. So all the 4 situations are possible. So our company, this ABC Limited, has been making a lot of profits, and they want to take a loan. Okay, why? Because this month there is no money to pay their employees, and they don't want to tell their employees, hello everybody, after 20 days we are going to get huge funds, and then everybody's payment will be made. Okay, because it will be troublesome for the employees also, right? Many of them might have home loans running, car loans running. Where will they pay their EMI from? Okay. So they decide to go to the bank and take a loan. And the bank asks them, how soon will you repay this loan? And what will they say? After 2 years, after 5 years, or next month? Next month. Why should I pay unnecessary interest? Why should I raise a loan for a long term of time when I will have cash in 20 days down the line in my bank? Okay. So just in case it gets delayed by a few days, they might just take it for a month, so that even if it doesn't come exactly on 20th day, it comes in maybe next few days. Right? So money market is a place where you go to when you don't have money to buy raw material, when you don't have money to buy work in progress. If you need to money for your work in progress, if you need money for storage of goods, if you need money to pay salaries, okay, all short-term things. Okay, so you do not need money for a long time to come. You need money for a month, 2 months, 3 months. The definition of money market is if the fund requirement is for less than a year, we call it money market. So most money market instruments are for less than 1 year time. Okay. So money market is a place where you go to a money market. Why would you go to a money market? Because you need money for a short duration of time. On the other hand, you go to this bank and tell the bank that I need 5 lakh rupees, and the bank asks you whether you will repay next month. Can this vegetable vendor say yes now? No. Abhi wo, they will set up a shop, furniture they will set up, signboard they will set up. Uske baad next month they will start making maybe profits of 10, 15, 20,000. How is it possible for them to pay 5 lakh next month? Right? It is clearly not possible for them to pay 5 lakh next month. Okay. So this loan is going to be of a long term in nature. Okay. So capital market is a market where you raise money for long duration. That money can be raised either as debt or as equity. Okay. So in case of ABC Limited also, this 1,000 crore, what do you think it is? Is it capital or is it short-term requirement or is it a long-term requirement? It's a long-term requirement. How can we say? Because they have gone to a capital market. Because they've gone to the capital market. Okay. Both equity market. So in for long-term purposes, both you can raise equity as well as debt. But for short-term purposes, nobody raises equity. Okay. I need money for next 1 month. Nobody will give you a stake in the company for that. Okay. Stakes in the company either on private basis or through secondary market, through stock exchange, will be available only and only when company wants long-term funding or a business wants long-term funding. Okay. nobody would give away stake because मुझे आज 50,000 रुपए चाहिए and next month I can pay it back. That I can take loan only, no? Why should I dilute my stake in the company for that? Okay, I can continue to own all of the stake in the company. Okay. Now, let us say for a moment, our vegetable vendor raised all the 5 lakh that he needed through through debt. Okay, he went to a bank, took a 5 lakh loan, and the bank also gave him 5 lakh loan. Okay. Now, there are two possible scenarios. Scenario one, this vegetable vendor is doing a very good business. At the end of year one, the profits happen to be 2 lakh rupees. Okay. And interest, he's got a loan at 10%. Okay, he's got a loan at 10%. So out of 2 lakh, how much will he have to pay to bank as interest? This is the profit. This is the profit before tax and interest. Okay. Tax he will not have to pay because there is a minimum limit of 2.5 lakhs. Okay. So just profit before interest. Right? You have to pay income tax only when your income exceeds 2.5 lakhs. And in this particular case, his income is not even 2 lakhs. It will get further reduced by the interest he pays. Okay. So 2 lakh rupees is his profit. Okay. Less interest. How much interest will he pay? 50,000. He has borrowed 5 lakh. Okay. Less interest. $50,000. So profit, net profit, tax obviously is not there as we saw, is 1,50,000. Now, who owns this business? This person completely owns this business. Why? Because all the money he has required was taken by loan. So all this 1,50,000 is his own to keep. Right? On the other hand, had he got money as equity, okay, and he now owns, let us say, only 50% of the business, 50% is given away to those people who invested equity, right? Because that is what happens in equity. You become a co-owner of the business, right? Raising equity means you become a co-owner of the business. Okay. So that would mean that you have a profit before tax of 2 lakh. Is there any interest to be paid? No interest is to be paid. You have not taken any loan. You have not taken any loan, ना? आपने कुछ लोन लिया है क्या? नहीं. आपने अगर कुछ लोन नहीं लिया तो आप इंटरेस्ट किस बात का भरोगे? So interest to be paid is 0. Net profit is also 2 lakhs. But this is the net profit of the business. Out of this, in your pocket only 1 lakh will come. Right? In your pocket only 1 lakh will come because you own only half of the business. Right? The other half will go into the other owner's pocket. Right? So which has been more profitable way of doing this business, raising debt or raising equity? In this particular case, raising debt. Okay. But look at the other scenario. instead of profit before tax, if you have a loss of rupees 1 lakh. So will the bank tell you, or will the lenders tell you, oh, so bad, you had a loss, no need to pay interest? Will that happen? That will not. You will still need to pay interest. And so your total loss is with interest increased to 1,50,000. Can you share it with somebody, or is it all your loss? पूरा का पूरा business भी आपका है, तो पूरा का पूरा loss भी आपका है, right? Okay. Now, if you would have raised it as equity, then if your loss is 1 lakh rupees, is there any further interest payable? No. So what is the loss of the business? Just 1 lakh. Is this all of yours alone? No, it is 50% of yours, 50% of your partner, right? So in debt, the interest will be payable and the money also will be repayable in full as and when it becomes due. Just because you made a loss, that doesn't mean that the money and the interest need not be paid. This year it's only interest, but sooner or later the time of repayment will also come, and then also you'll have to arrange funds for repayment. So if you keep making a loss, chances are that paying off the interest is already taking a hit. One fine day, when the time for the loan comes, you will also have to pay back this 5 lakhs. Okay. So when you take debt, important thing to understand is it doesn't make a difference whether you make profits or losses. You have to pay interest and you have to pay the money back also. Okay. Yeah. The plus side is if you make profits, you only have to dish up the interest cost, rest of the profits are yours. Okay. But if you raise money as equity, okay, if you make profits, those profits will be shared. But if you make losses, first and foremost, you have no additional cost in form of interest. You have no burden of, oh no, pehle loss ho raha hai, how and where will I repay the loan from? To think of. Okay. And even not all of the losses are yours alone. Right? So here is a question. If you are starting a new venture, what is riskier, debt or equity? Debt. Why debt? If you suffer from losses, okay, you will still have to pay interest, which will increase your losses. And if you continue to make year-on-year losses, probably you will have to sell other assets to pay the loan, because loan to bharna padega aapko, right? Equity, if profits happen, fine, we will all share. If loss happens, then also we'll all share. And there is no promise that you have given to anybody that I will repay, right? There's no repayment promise in the equity. Okay, so this year we share the loss. Next year, if profits happen, we share the profits. Is there any those people will ask you for repayment of money? No. I have given you a stake in that business, right? You bought the stake in the business. You have not given a loan. There is no question of repayment. Okay. So debt is less risky. Can we all agree? For whom? For the businessman, for the business person, for the business. Okay. Debt is risky. Okay. But in a profitable situation, debt also allows you to keep all the money for yourself, all the profits for yourself. So here is one fundamental rule that applies in all of financial investments. Okay. Debt is risky. That is why you get an opportunity to earn higher profits and keep them with yourself. Equity is less risky. That is the reason equity will decrease your income also in the situation of being profitable as well. Now think from an investor's point of view. Investor के लिए क्या risky है? If you are an investor, this vegetable vendor has come to you, give me 5 lakhs. Which is riskier for you? Giving him 5 lakhs as debt or giving him 5 lakhs as equity? Equity clearly, because no promises are made. Is he making any promises about whether they will pay back the money? No. Any interest promise? No. Nothing promised. Just sharing of profits, and if profits are not there, you have nothing. Right? So, as an investor, equity is risky. As a business owner, debt is risky. Okay, as an investor, debt is not so risky. You are promised to pay, you are promised to get the money, interest. You are also promised to get the, apart from the interest, you are also promised to get what? The principal amount. Okay, so both are promised. So as an investor, debt is less risky, equity is more risky. Okay, so if you intend to increase your expected return on your investment, you will need to increase the risk as well. Higher the risk, higher would be your expected return. That word expected is what people miss out a lot of time. Okay, as an investor, you are taking a higher risk by investing in equities, but does not promise higher return. That just is a thought that, okay, I have a right to expect higher returns because I've taken a higher risk. As a business owner, you have taken a higher risk by taking debt. Okay, so I have a right to expect higher return and keep all the profits for myself and enjoy all my profits single-handedly because there is nobody else to share with. Right? Okay, so let's do a recap of what we have learned till now, and then we will take a break. Okay, so we'll generally have a practice of taking a break at the half time, which today happens to be 10:30. Okay, so the financial markets can be divided in two broad markets. One is capital market, and the other is money market. Why would somebody go to the capital market? To raise funds for long term.
Long term.
Long term. Why would somebody access the money market? To raise money for short term. Okay. For long duration, funds can be raised via two ways: debt and equity. That means I will take a long term loan, but that long term loan I will have to incur a cost of interest on that loan, and I will also have to promise to pay back that loan. Okay, so that is the long-term debt. Equity, on the other hand, comes with no promise. It comes with a promise of sharing of profits. Okay, so if the profits are there, we will share them, and if a lot of profits are shared, their investors will get rich, and I will also get rich. Okay, so this is about capital market where the money is for long term. Okay, can you give me some things for which you might access capital markets? Some reasons to go to capital markets. Expanding business. Maybe you are setting up new offices, new factories, new godowns. Remember? So will you be able to pay back in next few months? No. This investment is, you need people who are going to give you money for a long time. Okay. You will buy a land, put up a factory on that land. You will then buy plant and machinery. If people start asking you for money next month onwards, that money is not there. Abhi to kharcha hi complete nahi hua hai, right? Then that factory is going to be up and ready, and then you are going to start production, and then hopefully from that production you will make profits and then pay back money. Okay. So if you are going to set up a new factory, what you need is a capital market. If you are going to expand your sales offices by opening different sales branches across the country, what you need is a capital market. if you are planning to launch a new product and you have to develop a new product for which you need to spend a lot of money, again you need a capital market. Okay. If you do not have enough money to buy raw material, which market will you need to go to? Money market. Because you will buy the raw material, and once that raw material has become finished goods, you will ultimately sell it and then pay off the money. Right? Nobody likes to keep paying interest for no reason, right? Okay. So you don't need that funds for a long duration of time. So you will access money markets. Okay. If you don't have money to pay bills in your company, what will you do? Money market. All the short-term things you will take as money market. Okay. In fact, if you find somebody raising money through capital markets to pay bills, to pay salaries, okay, it's a very negative thing, which means you are raising money from capital markets to pay salaries, which basically means you're not going to have this money. It's not a temporary problem. You don't have money to pay salaries and you are asking for a long tenure loan. Okay, so that clearly means that you are completely in a soup. Right? Okay, so we have capital market and we have money market. Within the capital market, we have two means: long term, we can raise through debt or equity. Okay, in money market, we have only option of raising debt. Why not equity? Because it will be crazy. I mean, nobody in the right mind would give away equity because they need money for next 1 month. Okay, if you think of it, equity is a longest term investment because equity capital has never to be returned back. Okay, it's just a promise of sharing profits. Okay, money is forever, right? Nobody will ever ask you to return this money, so it is almost forever. So it is a part of your capital markets. Okay, so that is about the two major markets. Okay, so after the break, we will talk more about capital markets as well as money markets. We'll try and just in each of these markets we'll have a full-fledged class. Okay, we'll have a full-fledged class just for equity markets. Okay, an entire 4-hour time for equity markets, an entire 4-hour time for debt markets, an entire 4-hour time separately for money markets. In fact, chances are we may not even be done in 4 hours. We'll need more than that. Okay, but today and tomorrow our goal will be to just get acquainted with everything, kind of a trailer, okay, to everything that is about to come. Okay, so we'll just have a look at this trailer in 2 days, and then we'll go on to each of these topics in greater detail, right? So that is what we are looking at. Okay, so with this we will take a break for now, and it's 10:24. Okay, let's make sure that we are here back by 10:40 to start our class. Okay. Welcome back, everyone. Let's restart. So we have looked at the fact that there are capital markets and there are money markets. Within capital markets, you have stock market or the equity market. We'll not call this stock market, we'll call it the equity market. Okay, why are we going to call it equity market? Because even debt can be traded in stocks. Okay, so we'll specifically say equity. Equity does not necessarily mean stock exchange. Primary market and secondary market. Within secondary market, we have two exchanges, BSE and NSE. Okay. Now, as an investor, let us say you decide to invest. Okay. Can you go to BSE or NSE and purchase stocks? Yes or no? Directly, you cannot go. How can you go? Through a broker.
Broker.
Yeah, you have to go through a broker. So then there is one more entity which gets added to the system, a broker. Okay, so if you think of, there is this exchange in the middle. Okay, there is a buyer and there is a seller. But between buyer and the seller, there will be buyer and the exchange, there will be a broker, let us say broker A. Okay, who will take the order of the buyer and send it to the exchange. Take the order of the buyer and send it to the exchange. Meanwhile, there is a seller. Seller has also punched in an order. Okay, and let us say their broker is broker B. Okay, take the order and send it to the exchange. Now, in the exchange, they have a system called as AOMS.
क्लास हाय आज बघ आता त्यांनी काल संध्याकाळी मेसेज केलाय कसं करणार
People, please mute yourself. AOMS. What is this AOMS? AOMS stands for Automatic Order Matching System. Matching system. Now, what does this do? It takes orders from all the brokers and finds orders to match with each other. Okay. In good old days, people had to do it by themselves. There used to be people in the ring. If you have seen Scam 1992, you might have seen this. A group of people getting into a ring and shouting out orders and whatever orders they want to sell and whatever orders they want to buy. And in that melee, they will have to somehow figure out who else is matching their order with and go and trade with that person. Okay. So that is what used to happen way back in 1992, and that is what used to happen in all of the history of stock markets till this computerization happened. Okay. Now we don't need people to get into a ring and to shout out what orders they have to sell and what orders they have to buy, and then find out somebody else also shouting out orders matching with theirs. Okay. So this automatic order system will take in all the orders, and let us say if broker A, buyer of this person has wanting to buy, let us say, give me a name of any share. Reliance. So let us say, if this buyer wants to buy Reliance stock at 2,400 rupees, which is what near about what the Reliance stock must be these days. Okay. And this seller has said, okay, and let's put a quantity also. This buyer wants to buy 100 Reliance stock at 2,400. And there is a seller also who is wanting to sell 100 Reliance stock at 2,400. So now, when both these orders are in the automatic order matching system, will they match? Yes. So the trade will get done. What if the quantities don't match? What if this fellow actually wants to buy 500 and this fellow only wants to sell 100? Yeah, at least, so that doesn't mean the order will be rejected. Order will be partly fulfilled. Okay, then the automatic order matching system will keep looking for others who have to sell. And then the automatic order matching system might find somebody who wants to sell 1,000 at the price of 2,400. Once again, this will also get partly fulfilled because 400 of this will be bought by this. Okay, so if the quantities mismatch, that doesn't mean the orders will be rejected. Just means that, okay, I have 1,000 chance. That 1,000 doesn't mean that the 1,000 should be, if I have 1,000 to sell, doesn't mean the 1,000 should be bought by one person. They can be bought by different people. If I have 500 to buy, that doesn't mean that there has to be one supplier of 500. Okay, so if I were to buy 100 stock, that may be sold by just one individual, or that may be sold by 5 different individuals as well. Okay, the only restriction as far as we go is we don't have stocks in decimals. Okay, we have stocks only as a one whole unit. Okay, what about price is different? This person wants to buy in 2,300 and this person wants to sell in 2,000. So let's remove the quantity bit. What if the price is different? Is there a match now? Even if the quantities match, this person wants to buy 100 and this person wants to sell 100. Is there a match now? There is no match. These orders will not match. Okay, they will stay in the system till the end of the trading session today. Okay, the moment market closes. So if the order can be matched, you can put the order in the morning, and if the order can be matched anytime throughout the day before the closing of trading session, okay, the trade will take place. But if the trade cannot be matched even till 3:30, the AOMS, the exchange, will not save the trade for the order for the next day. The exchange, the moment market closes at 3:30, market opens at what time in the morning? It opens for trading at 9:15. It opens for order putting at
9:30.
Okay, so 9 o'clock you can put orders. Market will take orders. Okay, but trading, matching of orders will start only at 9:15. So buying and selling will actually start at 9:15. Okay, at 3:30 sharp the market closes, and exactly at that moment all the unmatched trades are flushed out of the system. Okay, so if my goal is to just buy Reliance at 2,300, not today, I will have to put a fresh order tomorrow. Okay, tomorrow again my orders might be either completely fulfilled, I will get all the shares I want, or my order will be partly fulfilled because there were not enough people who were wanting to sell so many shares at 2,300, but some of them did. So some of my orders matched. Okay, and remaining shares. So if my order is partly fulfilled, partly it will be completed, and the remaining order will be flushed out of the system tomorrow at 3:30. Okay, so as far as exchange is concerned, it does not keep any orders beyond its closing time for the day. Some brokers do offer a facility that you just keep ordering once. If your goal is just to buy Reliance at 2,300, okay, you can give an order which lasts for an entire year. So technically, the order, it's not one order lasting for an entire year. Okay, what that means is you have given your broker instructions that look, मैं हर रोज सुबह सुबह उठ के Reliance at 3,200 का order 2,300 का order नहीं डालूंगा, ये डाल दो आप मेरे behalf पे every single day. Okay, because exchange will require a new order every day. Exchange does not carry forward any orders. Okay, so some of the brokers offer such a facility. Some of the brokers will say we can't offer such facility, and if you want to put daily orders, put by yourself. Okay. Now, let us say if the match happens. If the match happens, two more players will come into play. Okay, and these two players are left hand and right hand of the exchange. One is a depository and other is a clearing house. What is a depository?
Where securities kept in agreement
Mhm.
with one.
Think about it. Let us say you want to send 1 lakh rupees to somebody. Okay. Option 1, you can pay in cash. Option 2, you can simply do a UPI, NEFT, IFSC, whatever you want. Okay. So where was that 1 lakh rupees kept? In your bank account? And now where will that 1 lakh rupees go? To the bank account of the person to whom you have sold it, or you have transferred it, right? So from your bank account to the person who's supposed to receive. But all the while that money is kept with some banks, right? Okay. So just like money, your stocks are kept somewhere. Okay. Your money was kept in the bank, and your bank took that money from out of your account and put it into somebody else's account, either in the same bank or in some other bank. Okay. But you never touched the cash in between, right? Did you? No. So the money was in one bank account, it has got transferred to another bank account. Okay. So just like bank keeps all the money of yours, okay, and it is just allocated to you by making an account at this much of the money you own, okay, but the money primarily lies with the bank only. Okay. Similarly, a depository is a kind of bank for all the stocks. Okay. All the stocks lie at depository's place. Okay. So the depository is the place where every single stock is there. Okay. So depository is for stocks, what money is for bank. So depository keeps those stocks, but those stocks are not owned by the depository. Just like money in the bank belongs to some or the other depositor, stocks at the depository belongs to actually one or the other investor. So why will the depository need to come into picture now? Because if a trade has happened earlier, this seller had these shares. Now this has to be gone out from the seller's account and put into buyer's account, right? The change of ownership has to be reflected, right? If you have transferred 1 lakh rupees to somebody, it has to be taken out from your bank account and moved to the other person's bank account. The change of ownership of the money has to be reflected by putting them into correct accounts. Okay. But the problem is, we individuals cannot really have the direct account with depositors. Okay. It's only our broker who can have account with depositors. Okay. And we call it DP, depository participant. So even the broker will have 3 arms. Let's call this DPA and let's call this DPB. So now what will happen? Okay, and similarly on this side you have clearing member. And clearing member B. So once the order is matched, if the order is not matched, neither the clearinghouse nor the depository will come in the picture. But if the order is matched, both of these entities will have to come in the picture. And similarly, the broker has both these entities as well. The broker's job is to make sure that they transfer the order to the exchange. But if that exchange gets fulfilled, then the clearing must also happen, and the change of ownership at the depository must also happen. Okay. So what does the clearing house do? Clearing house does the actual process of transferring. Okay. Transferring. For example, if you were to put a check, the check needs to go in for clearing. Okay. If you make a NEFT transaction, that NEFT transaction gets recorded in the system and it has to be cleared by the bank. Okay. Only after clearing, the actual transfer of ownership of the funds can happen. Okay. So that clearing system is at the clearing house. Okay. This order matched, so all the matched orders will go to the clearing house and cleared there. Okay, which means the clearing house will do the processes required, all the processes required to make sure that 100 stocks from this seller, okay, will go on to the buyer. Okay, so clearing house does all the processes required. Clearing member B will make sure that the stocks are transferred and money is collected, because they have a customer who will be waiting for the money, right? Okay, clearing member A make sure that the money is transferred and the stocks are collected. Okay, so this is the job of clearing members. Okay, now once the clearing is done, the depository will have to transfer the ownership. Now understand one thing, as I told you, individuals do not maintain accounts with depositories directly. We can open a bank account, but we can't open an account with depositories. So our brokers do it. Okay. So this depository participant B will be holding on to 100 shares on behalf of their customer. Okay. Now these shares need to go to depository participant A, who will hold it on behalf of the buyer, which is their customer. Okay, is this getting confusing? Or is it clear? Everyone, can I quickly have a show of hands? Is it clear or is it? Yeah, I'll repeat it once more. Okay. So as such, there is a simple chain: buyer, exchange, broker, buyer, broker, exchange, broker, seller. Okay. Buyer puts the order, seller puts the order, their respective brokers take it, the brokers transfer it to the exchange. In the exchange, they have the system called as automatic order matching system, which has been there for about 20-25 years now. Before the system came into place, they had people actually shouting out what orders they had and try to match with each other. Okay, but once the orders match, they will have to transfer the stocks to each other. No, that transfer happens at clearing. Okay, the process of actual transfer of stock happens at clearing house. Okay, so at clearing house, broker A will have their clearing member A, broker B will have their clearing member B. Okay, so most brokers will have their own clearing members, but brokers can also be dependent on some other organization to get the clearing done. Okay, but a clearing member, either as a part of the broker themselves or as somebody appointed by the broker, their job will be to make sure to get the clearing done on behalf of their customers, for their customers. Okay, so broker B का जो customer है उसने shares बेचे हैं, clearing member B will make sure that the shares are transferred and money is collected. Okay, so clearing house will needs to do that job. Clearing member A will make sure that the money is transferred and the shares are collected. All this requirement, all the formalities will be done at the clearing house. Okay. अब ये सारी formalities हो गई. Now what is left is change in depository status. Okay. Because वो stock रखा कहाँ पर है? Stocks तो clearing house के पास है ही नहीं. They are just doing the formalities. Okay. Think about it. Clearing house is the registration office. You buy a property, get it registered at the registrar's office. Property is not there at registrar's office, right? Property is there somewhere else. Okay. So clearing house will only do the required necessary formalities. Okay. But the property in this case is lying at the depository's place. ये depository के पास है सारी property. Right. So the ownership change will have to be reflected at the depository. Okay. Once again, the little problem is, just like you can't directly deal with the stock exchange, you can't even have accounts, open an account with the depository. You can't go to depository's office and say, I want to open an account, give me an account opening form. Okay, you can't do that. Only a depository participant can open an account with the depository. Who's a depository participant? Most brokers are depository participants. Once again, if a broker is not depository participants, they will have to appoint a depository participants to work for them. But most brokers have a clearing member arm as well as depository participant arm, especially the big ones. Okay. So only a depository participant can open an account with the depository. So this depository participant will hold stocks on your behalf. Okay. So which means DB depository participant B का जो account है उसमें से 100 Reliance stocks निकल जाने चाहिए और depository participant A का जो account है उसमें 100 stocks आ जाने चाहिए. Okay, and these depository participants will further allocate the stocks to you because इसके पास depository participants के पास probably 1 lakh Reliance stocks आया होगा. उसमें से सिर्फ 100 इस person का, right? So you have an account, Demat account, that will show that how much of the Reliance stock which is at this depository participant A actually belongs to you. Okay, so all these stocks lie at depository. Out of that, depository is allocating certain stocks to depository A, depository B, depository C, depository Z, depository A.Z.1. All the depository participants were there. Okay, so all the DPs have opened their account with the depository. Okay, and the stocks that lie here are put in respective accounts of the depositories. Okay, those depositories have further accounts by their customers where to them they can show that, okay, I have 1 lakh shares. Out of these 1 lakh shares, 100 are owned by this person, 1000 are owned by this person. So each individual can see that number of shares that they own, which is held on by the depository participant, which in turn is actually there at the depository. Okay, think about it, a middle bank. So there is a bank where all the money is there. Okay, in fact, you can think about it similar status in the system also. There is RBI, which is the issuer and controller of all money, but you don't open an account directly with the RBI. Bank is the middle person. Okay, so you can consider as if RBI has all the money and each bank has been holding a part of it, and you have a bank account with the bank, not directly with the RBI. Right? Is this entire picture clear to you? So in all, you will have 9 or rather 6 people here, because exchange, clearing house, depository. Okay, this depository and clearing house are the right and left hand of the exchange, because just the order matching is not going to solve any problem. If the clearing cannot be done, then what good is order matching? And what good is clearing if the ownership status will not get transferred at the depository? All right. So once all the 3 things are done, only can a successful trade be done. Okay.
So all these online platforms, Paytm, Money and Pro, they are all like online brokers,
Yes.
and they have their own depository participants.
They might or might not. A broker, okay, so most big brokers have their own clearing member. So for example, every big broker, okay, they would not want to rely on a third party. Okay, so they would have their own clearing members and their own depository. Okay, so let us say if you are a broker, in your office, there'll be one department which will be a depository participant. In your office, there'll be one office that will be a clearing house, a clearing member. Okay. But if you are a small broker who's just starting the business, you might get into a management, you might get into a contract with somebody else who's existing depository participant to take delivery and give delivery of stocks on your behalf.
So
you
they
might-
can be individual depository participants also.
Yeah, there can be.
It's not necessary that depositories should be owned by a government only.
No, depositories are not owned by the government. In fact, there are two major depositories in India, by the way. How many? Two. What are they? Which are they?
CDSL.
CDSL
NSDL.
and NSDL. If you see, CDSL is a listed company as well. Okay, Central Depository Services Limited. Okay, Central Depository Services Limited is a listed company.
There are individual clearing houses as well.
There are clearing houses, although I am not able to remember their names now. But there are clearing houses. I'll tell you their names as well. Okay. So every stock in India as such will either be in possession of CDSL the full form is Central Depository Services Limited or NSDL, National Securities and Depositories Limited, something like that.
There can be other depositories also part.
Yeah, there can be, but at the time, as of now, there are only two. Okay. So each of these depositories has been actually promoted by a respective stock exchange. BSE has promoted CSDL and NSE has promoted NSD. So if somebody were to ask you who are the participants in financial markets, you will say there's an investor, because without the investor, nothing is going to happen. Then broker, because the person who is in touch with the investor is the broker. Then exchange, okay, because brokers cannot settle the orders themselves, they will require an exchange. Then once the order gets matched, there'll be a clearing house, there's a clearing member, there's a depository, there's a depository participant. So all of these institutions together come into play to make sure the successful market selling happens in a secondary market. Now comes the question, this order that you saw, the way our orders are settled, okay, there is a term which defines these kinds of market, okay, and these are called as order driven markets. These are called as order driven markets. Now, what do you mean by an order driven market? Order driven market is where all individuals give their orders, and if there is a matching order, it will be settled. Okay. Now, that is what it means, which means every person is free to put order at any price, okay, that they like. And everybody can see who else is putting orders at what price. Who else is putting orders at what price, okay? So if you want to see what are other people putting Reliance orders at, you will be able to see the volume of orders which are being put for Reliance to buy Reliance at 2,400, to buy Reliance at 2,350, to buy Reliance at 2,300, to buy Reliance at 2,200. Obviously, buyers should want to buy at lesser price. And on the sell side, you will find orders. Reliance sell orders at 2,400, 500, 600, 700. Okay. So higher the price will go, more and more people will want to sell. Lower the price will go, more and more people will want to buy. Okay. Somewhere this matches, like 2,400 is where it is matching currently, and that is where the orders are getting transacted currently. Okay. So all of this picture is clear to you in a order matching or order driven market. Okay. What is the other kind of market? The other kind of market could be a quote driven market. A quote driven market is when you go to somebody and that somebody gives you both buying price and the selling price. Okay. Think of a jeweler. Jeweler gives you gold price that the jeweler is willing to sell it, and the jeweler will also give you a gold price at which they are willing to buy gold for. Okay. So the jeweler will not tell you the jeweler will not. Okay, let's see. Okay, another first let's get clear. Okay, about the order driven market. Think of a real estate agent. A real estate agent, a property dealer. Let us say you want to sell a property. You will go to the dealer. Will the property dealer buy the property from you? Okay, you want to sell the property? Give the property to me. No. Property dealer will try to find a matching customer for your property. Okay, and once the matching customer is found, the property dealer will get both of you together and get the deal done. Right? Who is doing this? The property dealer. The property dealer is, so once if you go as a buyer and you tell the property dealer, I am a buyer, I want to buy something like this, will the property dealer say, I have the exact property, here is the property, I own it, I'm transferring it to you? No. So the property dealer will do what? Property dealer will just get the buyer and seller together and get the deal done. That is an example of a order driven system. The property dealer will take everyone's orders and see what orders can be matched. Okay, which basically means if I am unable to buy, find any buyer at all, this person's property, the seller property will not get matched with anything and will remain unsold only. Similarly, if I have a buyer, but if I can't find an appropriate property for them, that property will never be bought. They will not be able to buy the property. Okay, so there is a seller and there is a buyer. The middleman, the broker's job is to get the two together. That is what happens in an order-driven system. Okay, so everybody will take orders and try to match orders. Okay. Typically, in an order-driven system, there is only one price. Okay, but there is nothing called as buying price and selling price. Okay, there is not, just a second. Yeah, Pramod. हाँ मैसेज आया ना आपको? हाँ नहीं, that is not there today. आपका अरे that is not there today, I'm telling you, Baba. Yeah. Sorry. So order driven market, the middleman just does the role of matching the orders. Now the jeweler, if you go to sell the gold at jeweler, the jeweler will not say, okay, let me find a customer for your gold, and then the jeweler will not say that, okay, now I have a seller and I have a buyer, it is matching, so now I will get the trade done. No, jeweler आपसे gold ले लेगा, अपने पास रख लेगा, और जब भी customer आएगा उसको दे देगा, रहेगा, right? Similarly, a buyer has not to wait any time. Jeweler already has lot of gold. Okay, the buyer can, the buyer of the gold can immediately buy from them. Okay. So that is an example of a quote driven market where the jeweler will give two quotes, a buy quote and a sell. Okay. So in the order driven market, there'll be only one price. Okay. If a property is bought for 1 crore, the seller has sold it for 1 crore. The property dealer might collect brokerage or commission from both of them. So just like that, in the stock market, the broker collects commission or brokerage from both the parties. Okay. But in a quote driven market, the buying and the selling happens at different prices because there's no question of brokerage. Okay. You go to a jeweler, the jeweler will buy your gold. Okay. And then obviously while selling it, he has to sell it at a higher price. Okay. Only then the jeweler will make money, right? Otherwise, how will the jeweler make money if they buy at the same price and sell at the different price? So in a quote driven market, there are typically two prices, a bid price and an ask price. Bid price is that price at which the jeweler is saying, I am willing to bid for gold at this price. Which means bid price is the price at which you will sell it. Okay. Bid price is the price at which you will sell it. Why? Because the jeweler is saying, I am bidding to at this price for to buy gold today or to buy silver today. This is my price. Anybody who wants to sell to me can sell to me at this price. Clear? So bid price is that price at which the bidder is bidding to buy, the jeweler is bidding to buy. And at the same time, if somebody goes to buy, they will not sell at the bid price because usi price pe kharida, usi price pe bech diya. So why am I running the shop? I might as well go and do some social work. Okay. So bid price and ask price, there are two different prices because the jeweler will immediately buy and then later on try to sell it at a higher price, which will be the ask price.
So what instruments are used to put gold in market?
Some equity markets are quote driven style. For example, US markets. Okay, so in US markets, the broker is called a market maker and they give buying side price as well as sell side price. Okay, advantage is that your order, if you want to urgently sell off, you will never have a situation like there is no buyer because the market maker will buy and keep the stocks. Okay, irrespective of whether the market maker is finding the other side. So if nobody else is there, market maker will definitely buy. Okay, at the price at which they are bidding to buy. Okay, another example of a quote driven market, which is worldwide a quote driven market, is which? Forex market. Yes, currency market. In the currency market, there is no system of order driven markets anywhere in the world. It is a quote driven market across the world. You go to buy currency, there will always be a buy price and a sell price. Whether you go to a currency dealer or you go to a bank, okay, there will always be a buy price and a bid price and a ask price. Okay, so you go to any bank branch which deals in currency. Okay, if you go to sell currency to that branch, not every bank branch deals in currency because obviously it's not required. Okay, so you will need to find out which bank branches deal in currency nearby, and you will need to go to that particular branch, and you can they will, if you want to, let us say you have some dollars you want to convert to rupees, they will give you a bid price. So that is their bid to buy your dollars at. Okay, but at the same time, so they will not ask you to wait and say, okay, keep waiting here as long as as soon as a customer comes to buy dollars, we will match up your orders. That is not what they will do. You will not have to wait. They will pay you rupees immediately and keep the dollars with them. Okay, then whenever they have a customer who wants to buy dollars, okay, they will sell to that customer at ask price. Okay, so currency markets operate on quote driven system across the world. Okay, stock markets could operate on quote driven system, could operate on order driven system at different places in the world. Okay, Some places have actually moved on to a hybrid system. Okay, we'll talk about it later. Okay, which takes the best of code-driven system and best of order-driven system and puts it together. Okay. So as of now, US markets used to be earlier code-driven system, but now they have moved on to hybrid system by taking the best of both sides. Okay, so the way our market trades is an example of code-driven system. True or false? False. Okay, our market is not a code-driven market. Our market is a order-driven market. Okay. Okay. So participants in financial market, the list that we have right now is the investor, broker, stock exchange, clearinghouse, clearing member, depository, DP. DP stands for depository participant. What else do we add to this list now?
Seller.
Yeah, investor, seller, same thing. Will somehow I find the biggest or the most required participant of the financial market missing here.
SEBI.
SEBI, yeah, SEBI.
So we can add regulator, but that is not what I was talking about. So it's not just SEBI. In India, how many regulators do we have? We have SEBI, which regulates the security sector, then RBI, which regulates the banking sector. NABARD is not a regulator as such. And you have IRDA, which regulates the insurance sector. You have PFRDA, which regulates pension sector. Okay, so we have at least 4 major regulators in the financial sector. Okay, and then there are some others as well. How about banks? Are banks not a participant in financial markets? Without banks, nothing can happen, right?
Yes, they are.
Right. So banks is still missing, one of the biggest participant. What else?
Credit rating agencies.
Credit rating agencies, yes. How about mutual funds or asset managers?
Yes, sir.
Domestic institutional investors are who? They're asset managers, mutual funds, and insurance companies. Yeah. We have taken banks, commercial banks. What about investors? The places where most of us are going to get into. Okay, so this list can be long. Okay, so we'll need to think of all the people who are there in the financial markets and the roles that they perform. Okay. So for the last thing that we'll do today, we'll talk about particular role of the investment bank in the financial markets and how is it different from a commercial bank. Okay. So probably everybody knows what does a commercial bank do. So our banks like ICICI Bank, Axis Bank, HDFC Bank, State Bank of India, will call them commercial bank. Okay. So what does a commercial bank do? Open your account, take deposits, and give loans. So primary function of a commercial bank is to take deposits and give loans. Okay. If you have 1 lakh rupees to deposit and you go to an investment bank and say, I want to open an account with you and deposit this money, will the investment bank open the account and take money?
No.
What is this? Please don't mess around, people.
No.
Okay. So you can't open an account with an investment bank. Okay, that is not the business of an investment bank. Okay, so then the question comes: if a bank does not open account, take deposits, and give money, then what does it do? One of the most important functions of an investment bank is to help their customers raise capital. Okay, is to help their customers raise capital. So if ABC Limited, when our company ABC Limited decided that they will go to the primary market and issue shares to people, they will first have to appoint somebody called as lead manager or a merchant banker. Who are these lead manager, merchant bankers? Most of the time, it's an investment bank. Okay, so this ABC Limited will approach an investment bank or multiple investment banks. You will see most big issues have many investment banks, merchant bankers. Okay. In fact, LIC is one of the big, rather the biggest issue ever to hit Indian markets, and they have appointed 10 lead managers. Okay, to manage their lead, to manage their IPO. Okay. So this company ABC Limited, depending on their size of issue, they might appoint one or multiple merchant bankers or lead managers. Who are the people who play these roles? It's the one of these investment banks who will play these roles. Okay, so these people will do all the required stuff to make sure that the IPO becomes a success. Okay, so one of the jobs of a investment bank is to help their customers raise capital. Now, this is an example of raising capital as equity, but capital can be raised as debt also. Now, one simple way to get debt is just go to the bank and take a loan. ABC Limited can go to a bank and ask for 1,000 crores loan. And if the bank like SBI or ICICI or HDFC or Punjab National Bank or any other bank finds merit in the proposal, they will lend on the 1,000 crores, job done. But if ABC Limited is a very reputed company, they will think that we are such a reputed company. Why do we need to go to a bank to raise debt? Okay, because remember, bank takes deposits and then gives debt. Bank is a middle person after all. Okay, so if the bank is offering you a loan at 10%, and if you are a popular company, very noteworthy company, chances are that you might think, I would rather straight away go to the investors. Those investors are depositing that money in the bank at 5%. Bank is lending at 10%. I will go and make them an offer. I give them 7.5%. We'll meet midway. The investors get 2.5% extra. I save 2.5%. Right? Only a company which is pretty popular can do something like this. Okay, because a customer feels very safe with depositing in bank at 5%, but a customer may not feel safe with an unknown company even at 7.5%. So first and foremost, if I start offering you 5% only, nobody will deposit, right? Because even if I am the biggest of the names, even if I'm a Tata company, bank is still more safer than any company. But let us say if a Tata company says we are offering you 7% or 7.5%, chances are some investors will decide that instead of making IFD, let me put money here, because this looks like reasonably safe place to put money. Okay, so some investors will switch on here and buy this. So what will happen is ABC Limited will approach an investment bank and tell them that we want to raise debt. Okay, so the instrument that ABC Limited will raise is called as debentures or corporate bonds. Okay, so they will say that, okay, we are issuing bonds of 100 rupees each, which will mature after 10 years. Okay, give us 100 rupees and we will give you back that money after 110 years. And what in between? Every year, I will pay you 7.5 rupees of coupon. Okay, so you give me 100 rupees, every year I'll give you 7.5 rupees of coupon. If you go to a bank, they will only give you 5 rupees. But you come to me, I will give you 7.5 rupees every year for next 10 years. And at the end of 10 years, I'll give you 100 rupees back also. Okay, this is how a typical bond works. Okay, so this way a company can raise debt also directly from the markets instead of going to the bank. Okay, now there are two kinds of companies which raise directly debt from market. One are popular, highly rated companies. Why? Because they think that they can get a better deal, they can get a loan at a better rate by going directly to the people. And then there is a second kind of company which will offer maybe 15% rate of interest. They will say, give me 100 rupees, I will give you 15 rupee coupon every year, or I'll give you 20 rupee coupon every year. Why would a company do so? These are the companies whom the banks refuse to entertain. Okay, these are the companies whom bankers want out of their door. No bank is willing to lend to them. They do not have a very high credibility. Okay, so somehow from here and there, they are trying to get money and hence promising very high returns. Okay, as an investor, you need to think or understand that this is a very risky thing. Remember, if a bank would have accepted them, they would have got return loan, if not at 10%, at 12% at least. Okay, so can you make your investment and get high returns and then just pray that, okay, nothing bad happens to the company, as long as at least your investment is not fully paid back, then you can be safe. Otherwise, if the company closes down, then it will be difficult for you to recover your money. Okay, so investment bank helps you raise capital. Second, an investment bank also helps you do mergers and acquisitions. What is a merger and acquisition? Yes, if there are two companies, they can come together and form a bigger company, or there is one company who can go and acquire another company. Okay, so merger is typically when two companies come together and they become one big company. Okay, the final result is the same, but in acquisition, one company buys out the other company, whereas in mergers, it is both of them decide that, okay, we'll put together, come and become one big company. Okay, so we will have raising capital, mergers and acquisitions. Okay, investment bank will also offer advisory services to their customers and asset management services to their customers. So whatever investment they have, okay, an investment bank understands this world very well, so they can offer them to manage the assets as well. So these are the areas in which an investment bank operates. Now, if you look at it, none of these services are for retail customers. Okay, as a retail customers, do I go and tell that I want to merge my house with my neighbor's house? No, that's not what an investment bank is going to do for you. For that, you will need to get a contractor and break the wall in between. Okay, do I go and say that I want to issue bonds to buy a house? No, nobody is going to buy a bond because I want to buy a house. I don't have an option of raising debt from the market. I will have to go to bank only Nobody knows me and nobody is going to risk their money giving to a unknown person so that that unknown person can buy a house. Otherwise, we will have lakhs of bonds coming in, house buying bonds every day. Okay. So these kind of things typically will not be done by an investment bank. They will only work with large companies as such. Okay. And that is the reason why you will not see investment banks opening their branches every here and there, because it is not required. They are not dealing with retail customers. They are only dealing with corporate. Investment bank can raise their own capital by the same means, by issuing equity or by debt. Okay. Investment banking is not a highly capital intensive business to start with. Okay. As long as you have some people who can get the deals done, okay, you can get started. Okay. They don't require a huge capital to get started as such. Okay. Over the time, they will start taking some risks and we will study those things as we go on. Okay. But to start with, it's a matter of people. Do you have adequate or right people to start with? Okay. But if they have to raise capital, they have exact same means as everybody else. Okay. So these are the activities which a typical investment bank will do. Okay. So now I have a question, and this is what is the time right now? Okay, we still have some more time. So this is a question that we'll discuss. And then today, after that, we will end for the day and continue tomorrow. So the question is, many a times I ask the students, what is the difference between a commercial bank and an investment bank? And many a times students reply back, commercial banks offer services to retail customers, investment bank offers services to corporates. Is that a true distinction? Is that a right way to look at it?
Yes.
Do corporates not require commercial banking services?
Yeah, they require commercial banking services.
Investment banks serve corporates, that is true, which we already discussed. But commercial bank does not just serve retail customers. They serve Reliance also, they serve Apple computers also, they serve Amazon also, they serve the biggest of companies also. Okay. These big companies cannot go to an investment bank and say we'll open account. Investment bank doesn't open any accounts. Okay. Whether the amount that you deposit is 10 rupees or 10,000 crore rupees, you will have to go to one of the commercial banks only and deposit. And similarly, whether the amount of loan that you want to take is 50,000 or 500 crores, you will still have to go to a commercial bank and take that loan. Okay. So while it is true, investment banks do not offer any sort of services to retail customers, commercial banks offer services to everybody and anybody. Okay. Mukesh Ambani's account is also must be in one of the banks only, no? Okay. So on Reliance Industries, TCS, HDFC, biggest companies will have an account in some of the commercial bank. Okay. So commercial banks does not give service only to retail customers. They give their services to retail customers, small businesses, large businesses, and biggest of businesses as well. Okay. So for those reasons, this way to think is not exactly true. Okay. Because the two services are very, very different. And nobody can, I mean, you may or may not need investment banking services. You will always need a commercial bank service. Okay. For example, if you are a very large corporate, but you have no plans to raise capital. You neither need to raise any equity nor need to raise any debt. You have no plans to buy out another company or acquire company. So no M&A. You don't need any advisory. You have no need for an investment bank, right? So even from a corporate perspective, there can be a very large corporate who at the moment at least have no need for investment banking services. But there will be never a time in the life of this corporate where they will say, "Arey, aaj to mujhe bank account ki zarurat hi nahi hai, bank account band kar deta hu." Right? So commercial banking services, even for the corporates, okay, you will have corporates who don't require any investment banking services, but you cannot have a corporate which doesn't require any commercial banking services. Right? So for those reasons, this is not the correct answer. Okay. So now the question comes, what is the correct answer? If somebody asks you this question, okay, so what is the difference between a commercial bank and an investment bank? What do you explain to them?
Commercial bank is a bank who serves both retail customers as well as the corporates, but investment bank is something which serves the corporate, but not necessarily that they need it.
Yeah, it serves only the corporates,
Yeah, it's up to the
okay, or it
corporate.
offers services to the corporate. But we haven't yet told what is the different line of work. So the best way to answer this question will be to just tell about the different lines of work. Okay, and then you might go on to add that why is it that everyone will require commercial bank services, and in what circumstances corporates will require an investment bank service. Okay, so if you have to go on, please somebody explain now. Somebody other than her. What's your name?
Shreya.
Shreya. Somebody other than Shreya, can you explain to me? If somebody asks you, what does a what are the difference between what is the difference between a commercial bank and an investment bank? What do we go on and tell?
Investment bank helps us to raise capital as well as if you want to do merger and acquisition, you can go to commercial bank and
Investment
bank. Whereas commercial bank, if you want to take a loan or take money or
Yeah.
daily working activity, you can go to commercial.
So the right way to make a distinction will be to tell us what different activities do they do. Okay. So because if somebody says that, okay, commercial banks serve retail customers and investment banks serve corporates, that sounds like as if corporates maintain their bank account with the investment bank. But the fact is that investment bank doesn't open any bank account. Okay. So that for those reasons, we'll have to look at what sort of activities or what sort of services does a commercial bank provide and what sort of services does a investment bank provides. Okay. Now, in rare circumstances, an individual can also be a customer of an investment bank. I have thousands of crores in cash and I decided one fine day to buy some companies out. So will I go to my bank branch and tell them I want to buy companies with 1,000 crores? No, I'll need to go to an investment bank. They will help me buy out companies. Okay. So it's not as if investment banks do not serve retail customers or individuals. A retail customer will not call somebody with 1,000 customer crores a retail customer, but it's not as if an investment bank will not serve an individual. They will serve an individual, but how often does a person with 1,000 crores decide that I want to buy a company today? Okay, mostly they will offer, most of the time their services will be required by the corporates. Okay, so the primary difference is in the kind of services that they offer, and there is no overlap at all anywhere. Okay, you don't have a service which can be, acha, ye to investment bank bhi kar dega, commercial bank bhi kar dega. No, the services are completely different. Okay, they might have same parent companies. They might have same parent companies. You will see most of the parent companies have a commercial banking arm as well as an investment banking arm. Okay, so for example, if you look at a list of investment banks, you will find SBI Capital. So you have a State Bank of India, and they have a different investment banking arm as well. Okay, you have ICICI and you have ICICI Securities. You have Axis Bank and you have Axis Capital. HDFC Securities. Okay. In India, we don't have a concept of universal bank. In US, you have universal bank also. A bank that does that commercial banking activities as well as investment banking activities. But in India, we do not have any universal banks. Okay, law does not allow it. Okay, so any financial organization which wants to be doing commercial banking activities as well as investment banking activities will have to operate two separate companies for both purposes. Okay, so this is how we go about. And so today, what did we look at? Today, we looked at a list of financial market participants. Okay, we looked at the concept of order-driven markets and code-driven markets. Okay, we looked at how the order matching happens. All the systems, all the players would be required to do the order matching process. We looked at the concept of depository participant, depositories, clearinghouse, clearing member. We looked at the system called as automatic order matching system. Okay. Tomorrow also we'll continue with our overview of the financial systems. Okay, and from class after that, we'll start getting into details of each of these products. As I said, we are going to have a separate class on each of these products. Okay, we'll study equity in detail, we'll study debt markets in detail, we'll study money markets in detail. And then we'll study forex markets also in detail. We had just had one line about the forex market. The only thing that we already know right now is that the forex market is a code-driven market, but we'll have an entire class dedicated to forex as well.
What are the services given by investment bank rather than this merger acquisition and raising capital?
So there are 4 services that they can give. One is raising capital. Second is mergers and acquisitions. Third is advisory services. Okay, somebody might not need anything done, but they just need advice on matters. Okay, and fourth is asset management.
Okay.
Okay, so with that, I am done for today. Let me know what questions you have at the moment.
Depository private fund is just an individual.
It's a company, it's a firm. Yes.
Some US banks, just like Goldman Sachs and JP Morgan, also operate in India. So they just give services of investment banking or commercial banking services also.
Only investment banking. In US, they are both commercial as well as this, but in India, they don't have any commercial banking arms.
Okay.
Okay, then we end here today and we meet again tomorrow at 9 a.m. sharp.
Yes.
Thank you very much.
Thank you, sir.
See you tomorrow.
Thank you, sir.
Thank you. Bye-bye.